Money FM 89.3. Best of breakfast. The Bigger Picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. Me, Ryan Huang. And we've got the U.S. Federal Reserve pulling the trigger on its latest rate cut, a move that could set a tone for global markets in the months ahead. And as the U.S. dollar adjusts, all eyes are on Asia. Will regional currencies get a much-needed lift, or will lingering economic and geopolitical headwinds keep them under pressure? We speak with Joey Chu. She is the head of Asia FX research for HSBC, to unpack what the Fed's decision means for key Asian currencies and how investors should navigate the shifting landscape of capital flows, carry trades, and currency risk. Good morning, Joey. How are you doing this Friday morning?
Hi, good morning, Ryan. Thank you very much. I'm well.
All right, happy Friday. Let's talk about what's on the table with the Fed now with its latest rate cut. How does the Fed's latest decision and also its guidance shape your expectations of where the US dollar is going in the coming months?
Right. I think this Fed cut was very well telegraphed. And also what's surprising is that a lot of the Fed members ultimately rallied behind Powell and came together with a unified voice to only voted for a 25 basis points rate cut. So this suggests that it's still very much in the policy orthodox method. So in some sense, maybe that takes away some of the dollar decline, because some of the dollar decline earlier could have been related to Fed independence issues and concerns. But I think some of that concerns may have faded away. Regardless, our point of view is that, even if it's slow and steady, rate cuts should eventually erode the dollar.
Yeah, talking about the dollar decline, year to date on the dollar index at least is down by over 10%. What does this mean for Asian currencies in the coming days, in the coming weeks, as we see the implications or the effects of this play out?
Right. So actually in the immediate aftermath of the Fed rate cuts, we actually had the typical positioning squeeze in the dollar. So it's a little bit of the sell effect type of price action. But nevertheless, I think we are approaching levels in dollar Asia, which is, interesting again for people to consider some of the more downsides in Asia. For us, we still see Asian currencies sort of eventually benefiting by the end of the year against a still soft dollar backdrop.
Yeah, historically, we typically see Asian currencies react strongly to some of these Fed pivots. Which currencies in particular are most sensitive to US rates right now?
Right. I think, generally some of the lower yielding currencies tended to be more sensitive because they are lower yielding. So the fact that the dollar is joining them to be lower yielding as well tends to help as well. So with some of the currencies that we're talking about in this case could be currencies like Korean won, Taiwan dollar, ringgit, Thai baht, even Sing dollar, and of course the RMB.
Yeah, talking about the RMB, we have seen China's economy going through a bit of a slump. So the yen has been under pressure amidst those growth challenges. How much does the softer dollar give Beijing perhaps more breathing room to stabilize its currency?
I think it's interesting that overnight, U.S. Treasury Secretary Scott Bessent commented on the RMB actually managed to appreciate slightly against the dollar, even though it depreciated against many other major currencies like the euro. And he commented about how that depreciation against the euro, for example, could be a bit of a headache to European policymakers. But for the U.S., he was quite supportive of the fact that this kind of appreciation against the dollar is helping the trade relationship between the two countries rebalance. So, in our point of view, the RMB is going the right track, right? It is a very, very large source of trade deficit for the U.S., and so some continued appreciation would continue to help this rebalancing process.
Turning our focus to ASEAN, where we've got the Indonesian rupiah and Thai baht in focus in recent times because of what's happening domestically. They have seen their currencies especially volatile amid capital flow shifts. How much will the latest movements by the Fed help in terms of stabilizing them, perhaps?
Yeah, for the IDR, definitely it would help, because part of the reason why the IDR has sort of weakened is because of this consecutive rate cuts by Bank Indonesia. So that has eroded the interest rate differential between Indonesia and US to some record low levels, right? So the fact that the Fed is now cutting is helping to also allow this rate differential to either stabilize, if not re-widen. So that should help draw in, or at least reduce the capital outflows from Indonesia. So that could be quite important in sort of stabilizing the situation of outflows in Indo. As for Thai baht, I think recently some of the concerns that we've been hearing about is also with regards to the potential regulations around Thai baht and gold. Because as you know, one of the Thai baht's appreciation pressure has come from the fact that gold prices keeps hitting record highs this year. And so Thai baht is also naturally sort of strengthened along with it. And so if there is going to be some measures to sort of reduce this correlation, that could therefore affect Thai baht's year-to-date strength.
Talking about strength, we've been seeing the Singapore dollar also gaining strength. I believe strengthening by over 6% in the past year. And right now it's at 1.28 against the greenback, which, looking at my chart, seems to be pretty much at its highest levels in more than 10 years. What's the expectations of where the Singapore dollar is going and if the MAS needs to intervene at some point?
Right. So the MAS actually, all things considered, still has a mild and modest appreciation stance for the Sing dollar against a broad range of currencies, including the US dollar. So in some sense, this appreciation that we are seeing is in line with policy stance. But of course, this policy stance has already been gradually moderated. For example, that targeted or projected appreciation could have been even higher, say, at the start of this year. So we have already moderated this kind of strength. And that is, I think, relevant and also appropriate given the fact that, we have very low inflation in Singapore recently, especially imported inflation. Some of the strength in the dollar has already helped to moderate inflation, but now we might need to, watch it because inflation is already getting a little bit too low, too far away from the target. So maybe it's time to stabilize against the dollar.
All right, let's take a step back and I want to talk about capital flows and market sentiment. So with the Fed cutting rates, do you expect foreign capital inflows into Asia to accelerate? And what would that mean for FX markets?
So naturally, if the US is no longer such a high-yielding currency and drawing all this capital inflows, there should be more, diversification into alternative sources. But in our knowledge, it's not just about push factor away from the US. Asia also needs its own pull factors, right? So things like positive growth, momentum, or investment theses, AI, etc. So I think some of this, requires some investments or structural reforms in Asia. So to the extent that those countries are able to deliver those things, I think they will see more capital inflows.
Okay, so I'm wondering as well about the weaker dollar. Would that help revive any carry trade strategies in Asia? And if so, which currencies would be perhaps the most attractive?
Right. So for carry trades in Asia, right now, US is starting to cut rates, but the level of interest rates in the US is still very high. So actually at this juncture, there are really only three currencies that have higher interest rates than the US, and that's the INR, the Indian rupee, the Indonesian rupiah, and the Philippine peso. So out of these three, I think, each of them all have some advantages, but also some potential headwinds for Indo, as we have just mentioned. And then for India, recently there's been some trade uncertainty, tariff uncertainty. So I think to the extent that we see that tariff uncertainty reduce in the coming months, now that Trump and Modi are speaking again, then I think this is an interesting currency to consider.
All right, lots to watch out for on the currency front, and helping us out this morning, we've got Joey Chu. She is the head of Asia FX research for HSBC. Joey, thanks for your time and have a great weekend in advance.
Thank you very much, Ryan. Thank you, guys. Thank you.
All right, great having you on. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.